Welcome Accounting Boffins, you with Ashraf Patel and the crew. Remember guys, we're doing revision of reconciliations, specifically creditors reconciliation. Okay, so now, if you look at this particular statement, have you ever thought about the relationship between a business and its creditor? And obviously, why do we need to do a reconciliation? I think the following slide will explain it in terms of our reconciliations. Number one, you have a debtors reconciliation. What are we reconciling when we're doing a debtors reconciliation? We are reconciling the debtors control account with the debtors list. It's an internal reconciliation. Then we are reconciling the bank reconciliation. What are we reconciling? Our bank account as it appears in our ledger with the statement that we are receiving from the bank. Third one, creditors reconciliation. Now remember in this one, you have two types of reconciliations. One, internal, where you're reconciling your creditors control account with your creditors list, right? It's internal. And then very, very important, where you are reconciling your creditors ledger account as it appears in our books, that means the business books, with the statement that we are receiving from our creditor. Okay, so those are the types of reconciliations that you could expect in an exam. Again, when dealing with debtors and creditors, you also look at the aspect of internal control, and we know that the idea of internal control is to safeguard the assets of a business. And then obviously the ethical considerations which needs to be in place because we have to behave as ethical citizens, whether it be in a workplace or any other place in the country. We're going to focus on reconciling the creditors ledger with the statement that we are receiving from our creditor. In other words, we're looking at an external creditors recon. Okay, so let's just get a bit of terminology right. Firstly, who's a debtor? A debtor is somebody who owes us money, the business. That means we sold to that person on credit. As a result, that person is our debtor. Who's a creditor? A creditor is somebody that we have purchased on credit from. That means the business owes that supplier. So that's your debtor and your creditor. So here we go. If you look at your debtor, it's the customer who owes the business money. And if you look at your creditor, is the supplier that the business owes money to. Okay? In business, we keep a record of all credit transactions with suppliers by entering our information into the creditors journal and the creditors allowances journal. So therefore, your two journals that you basically deal with regarding creditors will be your creditors journal to record credit purchases and your creditors allowances journal to record any returns or allowances from our goods that we have returned to our creditors. Your credit transactions are then posted from your journals to the personal accounts of the creditors in the creditors ledger, right? The supplier is a creditor in the books of the business. Okay, what does this basically mean? It means that from these journals, you firstly post to your general ledger where you keep your creditors control account. Remember, that's one account with all your entries in it. But at the same time, we do what is called the triple entry, the double entry in our general ledger and a single entry in our creditors ledger. And the creditors ledger will give you individual accounts of your specific creditors. Okay. So therefore, you can see that in our documents, we're keeping a creditors ledger which has individual accounts for each specific creditor, and the supplier, your creditor, whom we owe money to, will send us a statement of the amount of money that's due to them. If you look at your financial records once again, the supplier keeps a record of all the transactions done with the business in the books of the supplier. The supplier sends a statement to the business showing its record of transactions. Now understand this here. You've got in your ledger an account for ABC Traders, meaning you are owing money to ABC Traders because of the credit transactions that you have entered into with them. Right. But at the same token, ABC Traders will keep a record of the transactions that they have entered into with us. Clearly you can see what will they then do at the end of the month. They will send us a statement indicating the amount of monies that are due to them. So understand the basis of this reconciliation. So this is what we call the supplier or the creditor's monthly statement. Okay, now, if you look, let's just change the perspective for you. From our perspective, right, we the business, we bought goods on credit, we owe money to the supplier. They're our creditors because we owe them money. But if we change the perspective now and say we the supplier, we'll say we have supplied goods to that business, therefore they are our debtor. Can you see that? So understand where and how it works. So every time you're going to debit something in your books, they're going to do the opposite entry, namely a credit. So that's why you will notice with our creditors ledger will show a credit balance, the amount due to our supplier, whereas the supplier will send you a statement with a debit balance indicating that you are owing money to them. Okay, so keep that in mind at all times, the relationship between us and our creditors. Again, we're saying that we the business, we owe money to the supplier. The supplier is what the money that we owe. Again, let's look at this relationship very clearly. We're saying that we owe the supplier the money. Obviously, they are our creditors. But they, the supplier, what will they say? They'll say the business owes us money, and therefore the business is a debtor to the supplier. I think I've explained that for you. So, if you finally bring this down to the bottom line, what does it mean? It means that in our records, we have a creditor's ledger indicating ABC Traders, meaning we're owing money to ABC Traders. What is ABC Traders going to do? They're going to send us a statement saying that, listen here guys, you have bought goods from us on credit, and as a result of the credit transaction for the month, this is the amount of money that you owe us. Okay. The supplier's statement is sent to the business at the end of the month so that it can be compared to the books of the business, right? Clearly. So, when we finally bring the two together, what are we bringing together? The creditor's ledger, where we have the individual account of the creditor, and we compare it to the statement. This process is called a reconciliation, right? What does the word reconciliation mean? It means to bring together. We are reconciling. What are we reconciling? We are reconciling the balance as it appears in our books in the creditor's ledger with the statement that we are receiving from our creditor, and therefore we're going to reconcile and make sure that the two figures are the same. This means therefore that you will compare documents, You will find and resolve differences, right? This is the process of reconciliation. Now, why is there a difference? What's causing the difference between the amount that you are saying you owe the creditor and the statement that you've received from them shows you a different figure? Why the difference? Simple. These differences could be between the statement and the creditor's ledger account due to one, outstanding invoices, meaning that you have received the last invoice that you have from your supplier is outstanding, meaning you haven't entered it as yet. As a result, you've got the goods, it's in your business, but the invoice that had to be accompanying those goods, you haven't received it as yet. So it's regarded as an outstanding invoice. It would also be outstanding credit notes, right? You have returned some stuff to your supplier, you've made the entries in your ledger, they haven't updated their records. As a result, a discrepancy. Also, outstanding payments. In what way? You've made an EFT payment on the 25th of the month, but the statement that you've received from your creditor is already dated the 20th, meaning your books have been updated because you've made the EFT payment. Obviously, they're not aware of the payment that was made on the 25th because they sent the statement out to you on the 20th of the month. Clearly, this would result in a difference between the amount that you have in your creditor's ledger as compared to the amount that the statement is reflecting. There could also be differences between the statement and the creditor's ledger due to discounts not recorded, right? Very simple. You've settled the account timeously, you've recorded the discount. However, when you receive the statement from the supplier, you find that the discount has not been processed. Or there could be errors, right? You've entered an invoice into the account of ABC Traders, whereas actually that invoice was supposed to be entered in the accounts of CBD Traders. Clearly an error that we have made and we need to correct. By the same token, our supplier could put an invoice incorrectly into our statement, and obviously that's an error that they need to correct. So as a regard of, means this would be as a result of errors from either side, our side or the supplier's side. Then you have omissions, right? Omissions just means that it hasn't been entered, it's omitted, it's left out. So there could be a situation where a particular invoice was not captured by us, and as a result, we've received it, but because we've omitted it, it's resulting in a difference between the statement and the creditor's ledger account. Okay, so what's the process? At the end of the month, before the creditor is paid, we compare the creditor's statement with the items in the creditor's ledger account. What do? We tick off all items which appear in both the creditor's ledger as well as the creditor's statement, right? This is just the procedure for reconciliation. Then we circle the amounts on the creditor's statement that do not appear in the creditor's ledger account. Then you circle the amounts in the creditor's ledger that do not appear in the creditor's statement. Clearly you can see, what are we doing? We're comparing the one against the other in order to identify errors, omissions, or whatever else may be resulting in a discrepancy between the two, namely the creditor's ledger and the statement that we have received from our creditor. And then obviously we use the additional information to record the differences. Now this is where we now actually do the reconciliation, where we say, right, these amounts are not appearing in our creditor's ledger. We find the additional information, update our creditor's ledger. Or if the errors or discrepancies are appearing on the statement, that's when we draw up a creditor's reconciliation statement. Very important. A creditor's reconciliation statement is an extension of your statement. Remember, the statement that you are receiving from your creditor, obviously it's their records. You can't change their records, but you use the creditor statement and then make the necessary changes in order to reconcile your creditor's ledger with the statement that you are receiving from your creditor. And in this way, you are reconciling. What are you doing? You're bringing back the creditor's ledger, you're reconciling it with the creditor's statement in order to ensure that the two are the same. So in this way here, what you've done is, after the errors and omissions have been sorted out, these two figures should now be the same. You should be able to say you have reconciled, you have drawn up a creditor's reconciliation whereby you've reconciled your creditor's ledger as it appears in our records with the statement that we have received from our creditors. Okay, so that's basically the procedure and processes that we need to put in place when we are drawing up a creditor's reconciliation statement. I'm sure you want to know more and see how do we actually deal with particular discrepancies. If you want to know more, the place to be is with us. Let's take a quick break and we'll see you just now.